The weekly dividend ETFs are falling and people are panicking. So in this video, we are going to cover the 9 weekly payers from YieldMax and see which one is holding up the best in this down market. I know we have a lot of fans of ULTY, but I'm going to say it now, it might not be the best performer in the last week. It's been falling and people are definitely worried. Now, if you don't know who I am, my name is Spencer, and I cover all of the weekly and monthly income ETFs on this channel. I've been doing so for years now, and I'm really excited, even in a red market, to get some good buying opportunities. Don't forget, if you're interested in income investing in ETFs, to like and subscribe. That way you never miss out on all the free content, and you'll know what is making income investors the most money. Let's roll that intro. Starting off really strong with CHPY, one of my personal favorites and what I think is an underrated YieldMax ETF. And if you are new or you need a refresher, the way these videos go, we're going to look at the AUM or assets under management and the trailing 12 months dividend yield, which means if it hasn't paid for a full year, the actual yield is going to be higher. Now, let's dive in. We can see we have 36 million AUM for CHPY, which I think, again, is pretty low. A dividend yield of 13.45%, probably sitting in the 50% range, if not more. We're going to look at the chart and see for each one of these, but particularly CHPY is down $3 from the high of 56 down to 53. What I like about CHPY is it did have a nice run where it went from the mid 40s all the way up to 56 and has trailed off. Not terribly, not as bad as some of the others. So I do think this one is holding up relatively well. Now we have to keep seeing it trade. We don't know for sure, but now let's check out the dividends. Last couple, and the reason I do this is because I want to see if the dividends are going up or down. And this is going to be per share. We had 37 cents, we had 41.5 cents, we had 39 cents, and we had 40.5 cents per share, which is very, very solid. I also have some phenomenal news. I will be interviewing some YieldMax executives next week. And what I need from you, some questions, some comments, some concerns. Let me know what you guys want to know. I know sometimes people hide this behind a paywall. If you give me a good question, I will use it. My reasoning behind that is, 1, I don't need you to pay me money. And 2, we all want to get better with investing. So if it's a really good question and it's something I think we all need to know about YieldMax ETFs, let me know in the comments. I have some other ETFs coming potentially soon as well, but I'll get more details on those very, very soon. So keep asking questions, put them in the comments, and don't forget to subscribe. GPTY is another very solid option, an AUM of 49 million and a dividend yield of 18.55%. This is the AI and tech portfolio option income ETF. CHPY, the one we just looked at, is their semiconductor portfolio. And lastly, we have LFGY that we'll look at in just a moment, a very high yielder, but that one is crypto. And I'm curious, I think they are going to be putting out some more of these option income ETF portfolios that are going to be weekly based off different sectors. I kind of know one that I really think they're working on, and I would love to ask them some questions about that in the interview. So I am planning those as well. So we might get a little bit of an inside scoop if they can legally disclose it. Now, GPTY, not super impressed. I mean, man, we saw it bleed today, down pretty heavily. Oh, 3%. Don't love it. But the high of 48 down to 44, this one's already fallen more than CHPY, which again, I'm not happy about. I wonder if the AI and tech, I wonder if the tech portfolio with their AI correspondents are actually higher risk than semiconductors. I would imagine they are, but I think they're all a little bit correlated. Last couple of distributions, we can see it was 32 cents, 31.5 cents, 30 cents, and almost 30 cents. Now, this is important because you can see per share, this one's trading at $44. CHPY was around that mark as well, but the yield on GPTY is a little bit lower. We're not complaining. It's probably 40%, which is still phenomenal, but I also think long-term, if you get a little growth out of these, that would be amazing. Now, it's not the point. The goal for these is income, so don't forget that, and let's jump into our next ETF. I was afraid of this. LFGY has fallen. The AUM has fallen below 200 million. The dividend yield is still high, probably around 60%, but look at this price drop from $41 down to $35, a $6 drop. Now, if you think it's going to bounce back up, could be a good time to buy. If you think it's going to keep going down, not the best time to buy. This one takes a beating, and I'm not the biggest fan of LFGY despite the really high dividends. If you don't believe me, check this out. Last couple, we had almost 50 cents, 47 cents, 44 cents, and 45 cents. So it does pay out a lot per share, and it's a $35 ETF. This is probably one of the highest yielders from the weekly payers of YieldMax, but if it keeps falling in price, you have to have some trade-off. If you're okay with that, with lowering your overall initial investment, but getting that back in dividends, there you go. It's not my personal favorite, and it's definitely not one that I'm going to be buying in a crazy red market. Now may be a very interesting time for the 0 DTE covered call strategies. And I know I've mixed it up on you. I changed the chart type, but I want to show you guys. In 1 month, QDTY is not down terribly. It went from $44.60 to $44.40. It's holding up quite nice, though it did fall from 45 down to 44.50. So we're down about $1. Much better hold up than the others. Don't know if that's going to be a consistent theme with these in this red market, but only time will tell. The AUM's a little lower, 12 million. Dividend yield, 14%. Probably much better than that. But if we zoom out to the 1 year, we can see it's kind of a little ugly as well. It did climb back up, but maybe they do hold up better in these markets. Last couple of dividends, we had 19.5 cents, 17 cents, 27 cents, and now 19 cents again. What I do think could be really good with these is if they don't focus on maintaining an insanely high yield, maybe we'll see some of that NAV maintenance instead. We won't be paying out too much, and it can continue, and we don't have to worry about options and all that stuff if we are still making consistent returns on these 0 DTE calls. Very interesting. Let me know what you guys think. Let's check out the next ETF. RDTY has a very different story. It fell from $45, almost $46 down to $44. Not terrible, but at the high it was at $46. So it's maybe down $1 to $1.50. Can't really complain. The AUM is also lower at just under 8 million, very low. Dividend yield of 16%. I mean, it is what it is. The Russell funds seem to always perform worse, especially in down markets. They do not hold up well, and the last month hasn't been great. We can see the high for RDTY was almost $47, so it's not as bad, especially as LFGY. And I am really curious to see if these perform better in the red markets, because the 0 DTE covered calls should be safer. They should be, but you never know. Let's check out, oh, wait, I almost jumped the gun. Dividends. Oh, I can't say that on YouTube. You can't say gun. Oh, well, they may find me. They won't. 39 cents, 35 cents, 25 cents, and 31 cents. Now, one thing that's really, really important, though, this one is a higher yielder, and it does go down in price. So it really is another trade-off. Do you want higher yield but lower NAV stability? That's up to you. XDTY is not doing bad whatsoever. If we look at the 1 month, it's kind of flat even. That's amazing. The 1 year, yes, it was really bad at the beginning. Look at this. If I had $1,000 for every time I bought the top of a stock, I'd blow it all because I would still buy the tops and I would lose all the money. But anyways, at least I'd have some money initially. And then tax write-off, you know. I'm yapping today. AUM, 13.6 million and a dividend yield of 12.75%. Can't really complain. It's doing its job. I do think of the 0 DTE options, SDTY has been performing pretty well. Not as good as QDTY, but better than RDTY. Last couple dividends, 16, 14.5, 20, and 20 again. So not a super high yielder. It's still $45 per share. But if you are hoping it holds up better, or you think it will hold up better in these markets, and you want a little bit of exposure to the different indices, this is one to watch. A moment of silence. All right, looking at the chart, it looks very similar to my hopes and dreams. It was pretty high and then all the way down. ULTY, $3.33 billion in AUM. Someone did tell me that it dropped $1 billion in AUM. I don't think that happened. I don't think it was ever in the fours, but it was a comment. If I'm wrong, let me know. And you guys will. You guys are great at letting me know when I'm wrong. That's not sarcastic. Genuinely, I mess up sometimes, and you guys are phenomenal. Dividend yield is not 125%. I think last time it was like 80 to 90%. They've been paying out over 10 cents a share, which is aggressive. Now, I've been talking with some people, and I wish that they would pull back on the distributions. Let them come back down to 8, 9 cents per share and keep the NAV a little better, but it doesn't look like they're doing it. A high of 640 all the way back down to 730. We're not near all-time lows. We still have 30 cents to go, but we're kind of heading that direction, it looks like. Last couple of dividends, 10 cents, 10 cents, 10 cents, and 10 cents again. I would love an 8-cent dividend, and I would love it to stay in this $5.70 range. Now, my buy point is pretty high, initially at 633. My actual trades in my Roth IRA, because I do own this one, I don't even remember, but I am in the red, unfortunately, with a lot of the other weeklies that we've been seeing, including COIW, because Coinbase fell like mad. Now, my take on ULTY, if you haven't seen my ULTY video, I'll link it at the end of this one. I talk all about everything that changed. I talked about the Seeking Alpha article that was kind of like a hit piece on ULTY, bashing it without a lot of information or backing. And although I do think ULTY is still highly risky, and we've held these during really green markets, it's just a little scary. I also want to point out the change. Okay, this is going to be a little bit of an update on ULTY. The change that took place with their strategy, I've been informed it was October, not March. Now, the difference, things that I don't fully understand, when the strategy change was implemented, how quickly they started using all the different options they were available to. I don't know. I didn't track it that closely. It's a really deep dive and detailed thing. And I talk about so many ETFs. I don't like to get into the too far details of just one, but there are channels that do that. So I do think it did happen in October, and then switching to weekly happened in March. And so people got more into it, but I will say that AUM does not change the price, the NAV price. I explained all that in the video. Check it out if you are interested. Ultimately, ULTY, it's a high-risk fund. It's not a fund that I would hold solely to retire on or solely to live off of, but it is fun for some fun money, and that's what I use these ETFs for. Not all the weeklies. Some I really think will do well in the long run, but some are just really high risk, and ULTY is one of them. A lot of the YieldMax ETFs are very high risk, I will say. So if you were expecting to become a millionaire off of ULTY, womp womp. It would have been great if we all could, but I don't know if we will. Maybe you guys can if you have enough shares. That's all right. But I don't know if it's going to bounce back. And you can ask me in the comments. I don't know. I simply don't know. It all comes down to the strategists and what they're implementing in the times of red markets. I do think next week will be better. Even if the trend continues, I think they've been buying a lot more puts. I think there's a lot more hedging going on by the strategists because we see that they see we're in a red market. And so that was a really long rant on ULTY. But those are my thoughts. Check out that video for the full detailed breakdown. I think it was a pretty good video. Not trying to toot my own horn, but I did really enjoy filming that as a ULTY investor myself. Now we have YMAG. This one has been holding up better than YMax. Last time I did a YieldMax update, it was actually outperforming YMax. So that'll be really interesting to see if it still is this week. AUM, 381 million, dividend yield of 47.65%. Very solid. We're almost to a full year of dividends. We're about 1 month away. You can see my buy points were all over the place. I had drip on initially. Update. I hope that was not too loud for you guys. Update. I spoke with someone from Moomoo. If you don't know, they've sponsored the channel a couple of times. My link is down below if you want to use it. And it helps me out a bunch. But they're saying it should be active. So I'm going to wait for more information. I'm not sure if it's a difference thing. I think Moomoo is China based. And I know they have offices in the US, but I don't know what's happening. Goes over my head, but I did list it as an issue. And so they are working on it, which is very good news. I like that they do that. But again, YMAG is on the Magnificent 7 fund of option income ETFs. I've talked about it a lot. I'm not going to beat a dead horse, but let's check out the last couple distributions. 20 cents, 7.5 cents. That's because of the cycle. Then 8 cents. Maybe it's not because of the cycle. That was just a really bad couple of weeks. And now 16 cents. Can't really complain. YMAG and YMax are some of the older ones, and they've been relatively consistent, so I'm not going to bash them too much. But now let's check out YMax. I do want to quickly say, you guys have been really great in the comments, and I want to address something that people have brought up. There are a lot of YouTubers that make content on these things that don't actually invest in them. And while I do hold money in a lot of the YieldMax ETFs, a lot of the Roundhill ETFs, they are not the main bulk of my investments. I like dividend stocks. I even have some growth stocks and some growth ETFs in there as well. I have a mix, and I love that. I like to put some money in these weekly pairs because it's really cool to see the compounding. And if I think an underlying is going to do really well, I buy that one. Now, that being said, I've seen a number of ETF investors now become income investors, even though they don't actually buy or hold any of these ETFs. So I just want to say, people will make content on anything that's popular, and these have become really popular, but I actually do own these. And I'm going to start a series where I showcase what is in my portfolio, but I wanted to say, you can still watch their content. It's totally up to you guys. I'm not bashing anybody, but if someone says, oh, I love this ETF, it's amazing, I'm so blown away by the returns, and they don't hold it, they're not really in the game with us. So just my thoughts. I've seen so many comments about that recently. I've even had messages about it, and that's why I am addressing it. But let's talk about YMax. $1.15 billion AUM, dividend yield of 64%. Very high yield, but the price return hasn't been amazing, as we will see, especially because this last drop. I mean, look at the difference. So YMAG compared to YMax, YMAG held up significantly better, fell from 1570 to 1540. YMAX, yeah, those are all the weekly pairs, by the way. I hold all of them. Fell the last couple of weeks from $14 to $12.80. It is not holding up, and so I think YMAG will come out on top again. But let's see the dividends. 18.4 cents. Then we had 16.5 cents. We had 14.5 cents and 11 cents. So a low dividend and a bit of a crash. Not looking too good. I did hear that they implemented some ULTY strategies now into YMAX. Let me know if you guys have heard that in the comments. I'm not positive. I need to look it up. I'm just being a little bit lazy. I'm sorry. But if I do know, I will let you guys know in the next video update. Also, let me know if you want more of these updates. If you want them weekly, put it in the comments. We're going to jump into our weekly tracking dividend spreadsheet now and showcase the total return and all the dividends these weekly pairs have paid us. Here's what we are looking at. Now, I am going to showcase the amount of money I've invested in the next portion of the video. So remember that YMAG didn't pay out super high compared to some of the others. I have more money in YMAG, YMAX, and ULTY because it had drip on when I first started the challenge. Now, YMAG, 99 cents. Cannot complain. That's amazing. YMAX, 71. Still not bad. Not great. Could be worse. Not complaining. LFGY, 90 cents. Amazing payouts from LFGY, but that price drop is scaring me. GPTY, 58 cents. Still holding up really well in this market. We can see SDTY, 41 cents. RDTY, 62 cents. And QDTY, 38 cents. I'm not even going to lie. These ones might be the buy if we see this market continue. And I like I stated a million times already, I'm curious. I'm just a curious guy. I'm a nerd who loves ETFs, and I want to see what's going to happen because of the strategy, they might just hold up better. And that goes for the Roundhill ones as well, especially because the Roundhill ones don't incorporate leverage. CHPY, neither do the YieldMax ones, but the rest of the Roundhill weekly pairs are mostly leverage. CHPY, 81 cents. It's a sleeper. This one is so phenomenal. And ULTY, $1.77. Same dividend, but the price has fallen, and that is really hurting a lot of people. So we'll see, is ULTY holding up? Is it still one of the better ones? Only time will tell. And now our dividend payments, we got paid $17.17. Absolutely amazing. Let's check out our overall total returns. Now I have to do a harmless plug real quick. If you are interested in purchasing this spreadsheet, I have it available on my website, spencerinvest.com. It was taken down for a minute. I've been trying to fix it, but oh my goodness, I'm a YouTuber. I am not a business operations manager, and it's been a lot of work. But I did update everything in here, and I've got a pretty accurate readout on what we invested. So we put $900 in initially. We've been getting a ton of dividends. Our cost basis is $1,074.26 because we had drip on. Now, our market value is $969.24. So we're down $105 in our market value. Our day gain, all that is all calculated. Total returns, though, we are up $130 and 12.11%. I think it's around there. It gets a little bit crazy because I was moving stuff all around with spreadsheets, but we are positive, which I love. We've got a lot of cash from the dividends, and that really does help. We even received $235 in dividends, which is amazing. But this showcases our monthly dividend income. You can scroll down, track your dividends, all of that and more. It's on sale for now. I'm not sure how long the sale is going to go for. I might even forget about it and it'll be on sale forever. But I like tracking the dividends. We can see May was a really high dividend month, and since then it's been falling. We've only had 2 payments so far in August, so don't count this one out yet. It's looking like it's on track to be just below last month, but we got to wait for those payments. Now for the meat of the video. You can see my number of shares, my cost basis for each of these, and I am going to slide to the right. Now, the 52-week range, very important metric, and things are not looking good. ULTY has fallen heavily. It was in the middle, now it's way low. Don't love to see that. The ones that are holding up so far, CHPY and GPTY, which I was kind of guessing for. So when we slide all the way to the right, we can see our total returns. Good, I was checking to make sure I wasn't blocking. We see our market return and our total return. So total, YMAG is now outperforming YMAX. We are still at 19.1% total return, and YMAX is at 16.8%. YMAG is holding up significantly better than a lot of the others. I'm guessing because the Mag 7 hold up better in these markets, they don't take quite the beating, especially at the beginning of a bear market, if you think we're going into a bear market. And YMAX is even more diversified, but smaller cap stuff. So a little bit, I wouldn't even say higher risk because there's more holdings, just depends on what you believe. LFGY is back into the red, a place we're used to, unfortunately, 2.29% in the red. GPTY is down to 7.7% in the green. Not great. It did fall, but it's not falling nearly as bad as some of the others. SDTY 357 in the green, 3.57 I should say. RDTY is still 13.87 in the green, and QDTY 28.76% in the green. Now, if you're looking at this and saying, oh, I'm going to buy QDTY because it is better than SDTY and RDTY, I bought SDTY at the worst possible time. It was near the inception of the fund, and it fell heavily. So there's a few months difference in those buying points, and it worked out to make RDTY and QDTY look a lot better. In reality, they're all pretty close, but I do think QDTY is the best. SDTY in second, RDTY is the worst performer from what I've seen, not financial advice. Then we have CHPY still up 17.69%, which is amazing. And ULTY, our initial investment, still up 24.35% with the dividends. Let's slide over and look. Another key portion here is our cost basis versus market value. So when you're looking at the dividends, I never said it. I'm going to get comments about it. When we look at the weekly dividend log here, this is per investment, not per share. On Moomoo, it is per share. So back into our positions, cost basis, market value, we've paid more for YMAG and YMAX, a little more for LFGY, and that's why the dividends are so big, and same with ULTY. So the dividends are a little bit skewed. Our lower payers, QDTY, is still paying out quite nicely. The dividends look a lot worse on the sheet, but you have to realize they're 20% less invested because we don't have fractional shares. Now, all the way to the right, total dividends. These are just interesting metrics. I wouldn't hold, a lot of weight to them because I bought all these at a different time. YMAG and YMAX I've held for almost a year. LFGY I've held for a couple months, and ULTY for a couple months. So ULTY, LFGY pay out the most, but they're not the best performers. CHPY is standing out, and GPTY are standing out as the best performers so far. They have not fallen like the others. They have still paid their dividends very solidly, and they're nice and diversified. The only reason LFGY doesn't fit in that mix is because it's higher risk, higher yielding, and the NAV suffers more. So I hope that made sense. So if you're looking for one to hold up better in these markets, although it's been a short amount of time, GPTY and CHPY are doing really well. And YMAG, a surprising winner, outperforming a lot of them this week. Love to see that. Let me know what you guys think in the comments. Now, if you liked this video, you're going to like this popping up on your screen right now. Check it out. It's my last ULTY update and some ETFs with no NAV erosion in case we're going into this crazy bear market. I want to say thank you guys so much to 27,000 subscribers. You are absolutely amazing. Hope to see you in the next video.